Good evening, everyone. I'm Steve Carver, and I'm talking to you from my home office studio in Dunn, North Carolina. And tonight we're going to be talking about basic bookkeeping, forecasting, and negotiating skills to help a startup entrepreneur kind of get in the right mindset, know how important these skills are for you when you're starting a business. This, excuse me. This is my presentation number 1142, and I welcome you to on my journey in entrepreneurship, and thank you for letting me ride along with you in your journey through there. I want to tell you right now, I'm not a lawyer, and I'm not a CPA or a tax attorney or advisor. I'm a fellow that's been in small business continuously and through today for over 60 years. Matter of fact, today I had a real good day. Sold right much equipment nationwide, and tonight after we finish this webinar, I'm going to quote a fellow in California some equipment. So I know what it is to be in business, good times and bad times, and I'm happy to share with you some things I've done right and some things I've done wrong, hopefully, so that you won't have to make the same mistakes that I have. First advice always is get a second or third opinion before you make a decision that's going to affect your security, your business, your future, and find someone that's been there and done that or has got a good head on their shoulders about business and can give you good advice. Your small business centers at your local community colleges are there to serve folks wanting to start their business, not necessarily the kids in college, but the entrepreneurs out in the community. So if you haven't touched base with your small business center locally, I suggest that you do that. Tonight we're sponsored by the center at Sampson Community College, and Bart Rice, who was just with us a few minutes ago, is the director there and does a wonderful job helping lots of people every day. So we appreciate Bart, and he certainly appreciates you guys. If you'd like to set up an appointment there at Sampson, give them a call at 910-900-4025, and he'll be glad to work with you any way he can. And he has not only me that I work remotely, but he also has people in-house that can help you with a lot of different situations, and be glad to help you with that counseling. It's free of charge, totally confidential. He's just a really good person to work with. Tonight or tomorrow, you'll get an email that's got a questionnaire in it, a survey form about our webinar tonight. Please take 60 seconds and fill that out and send it on back to him. These information helps Bart and the other directors plan their webinars for the future. So I really encourage you to fill those questionnaires out and send it in. It'll take you less than a minute to get it done. Study guides have been emailed to you, hopefully, and you have them. Tonight there was 8 of them, which when you get the study guides from us, the one that starts out with a number, that's the talking points of our lesson. And if you don't print that out, this is a good chance for you to have something to make notes on and follow along with us. But you'll have quite a few other good information in there, including the quiz for this course. And if you'd like to fill that quiz out, we'll be glad to bring that in and give you consideration about what you've been up to. Rosa is with us tonight. Welcome, Rosa. And I see Sarita and Truck is with us as well. Thank you all for joining us so far. We'll probably have more to come in. And Rosa, I'll email you a copy of the quiz with the answers so you can see what we've been up to for the first 6 weeks and get a feel for how our courses work. So look forward to seeing you that email. Next Tuesday night, I'm really excited. We're starting a 5-part series about building a new business with less stress and more profits. This 5-part series will last us through the 1st of December on Tuesday nights. And next Tuesday night, we'll start out with the subject could be called Red Flags and Pivot Points. And this is a good presentation that helps new entrepreneurs learn how to turn your radar on and be aware of different turning points, earning points, and learning points that are going to come your way. And these are the times that it's time to make changes in your business. So I think you'll find it very interesting, and I'm looking forward to helping you along this way, and then we'll pick it up and go from there. So if you'd like to continue to plan to be with us on Tuesday nights, you can start next Tuesday and do it. We'll finish up this particular course next Thursday night, which will be part 7 of the 7-part series, and it will also be the graduation night for the folks that have been working with us over through Nash Community College, that group, as well as this group here at Sampson, to wrap up this series that we ran at the same time. But next week, our main focus will be on taxes and deductions and depreciation and record keeping and such as that. And so, Rosa, as an established bookkeeper, you probably enjoy next Thursday night as well, and as we get into depreciation, because it's really important for new small businesses to understand how depreciation affects their books and their taxes. Now, the good news is if you miss some of the Tuesday night sessions, just like through this, on November 7th, you'll be able to pick up and be able to do the repeat classes on Thursday nights all the way through December as well. So if you miss the class on one night, you're able to make it up on another night. That way you'll be able to qualify for your certificates if you'll like. But next Thursday night, I'll be announcing the winners of all the certificates and awards for our fall series, including the first in class and also those that are getting the extra mile awards, achievement certificates for those that are finishing up everything. So I look forward to doing that. Through our series, we've had 29 people to work with us, so we've had a good group to join the fall series. Looking forward to even more in the future. We've had 5 folks that have got perfect attendance after 5 weeks, and indeed we've got looks like 4 other people that have only missed 1 class after 5 weeks. So with tonight's class and next week, maybe everybody can qualify for certificates. Special thanks to those that have participated, including Jimmy Packer at Garland and Sarita at Clinton. I see Sarita's back with us tonight, and she is the wonderful lady that prepares all of our certificates for our classes. So thanks for being with us. Hope over in Murphy. Hope things are better with you, Hope, and your neighbors are recovering from the damage as well. Sarah has done a great big job and just a wonderful job at Nash Community College. As Truck is with us, and she completed all of her homework the first week. I was just so proud of Truck. Reverend Thomas has been with us 100% attendance, as has Miko and Tasha and Keisha. Kind of fell off the wagon with attendance, but she'll be back, I'm sure, because she's been with us for a while. Cynthia's getting ready to launch her business, Posh Llama, at Lexington, so we're looking forward to hearing more from her in the future. And Robbie James there in Sampson County has completed all of his homework except his videos, and he's working on those based on communications we had today. So thank you, Robbie, for all that you're doing. David got started with us real well. He's in the tax prep business in Marshall and Weaverville. And the sad news is his whole community got washed away, and including his office. So I know they are basically just trying to put their lives back together in Marshall. That was the welcome sign to the community, and the river took it down and just washed away the buildings. That's Main Street, Marshall, North Carolina. Used to be buildings from the front to the back. So they're going to have a busy winter, and our hearts and prayers go out to them, no doubt. Another sad case is Vanessa McIntosh, who was one of our regular attendees and first-in-class winner in our series a year and a half ago. Vanessa had started up a great new business, 5 Alarm Logistics, and just really booming with it. And the storm basically just destroyed their house up on the hill. She lives in Spruce Pine in Burnsville. Went through the roof, and the tree did, and the flood washed through it as well. This is what one picture of the inside of their house. So really concerned for them and praying for them, and hope they got a place to stay warm. She did start a GoFundMe account. Well, I was happy to send a little contribution, and would welcome each and every one of y'all to do so too. I'll send you a link to her account if you'd like to send some help over to a family that's close to us. We'd do that. These are all members of the Academy. of Entrepreneurs and Associates, which I invite each and every one of you to consider becoming a member of through your work and your mutual helpfulness to other entrepreneurs. You'll see this page at Facebook. I encourage you to visit there, join up and link it and watch it. After this week, I'll be adding all the new members and some information about each one of our new associates in the Academy. So send me information about your business. Let me know what you're doing, photos and such as that. We'll do all we can to get you into the Academy and work hard to make it work. Our words of the week now, several of you have already sent these to you. Let's get your fingers busy on your keyboards and type in some answers here if you know them. Do you remember what are the first 5 weeks? Do you remember any of these words? If you do, just start typing them in. Show me some hot fingers over here. Make it happen. I like to ask you to type them in because the more you do that, indeed, the more you'll help remember these words and start using them and make them work for you. So I don't even know if you guys have got keyboards and chat buttons tonight. If you do, let's see what you can do. But the words so far that we've used, week 1, shrewd, week 2, mindfulness, week 3, assertiveness, week 4, endurance, and week 5, resilience. All these important words for entrepreneurs to have in your vocabulary because it encourages you to be more savvy, more clever, more aware, and just be on top of your business more. And as we use these words and think about their meanings, it helps kind of motivate us internally. So I'm happy to ask you to do that. So now we're at week 6, and our word is poise. What a nice word. How often have you used the word poise this week or this month? Probably not a lot. I hadn't used it a lot in my conversations, but during these times that it's our word, I do love it because it's talking about having self-composure and dignity. And if we're in the selling world and working with clients and we want to build relationships, this is what people look towards you to have if you hope to have good character. So self-composure and dignity are important. The word poise is a great word indicating calmness and confidence, elegance, self-assurance, tact, and the word I really love is grace. Being gracious is maybe one of the greatest gifts that you can give to someone, sharing graciousness with them, sharing your poise. Indeed, it shows confidence. And when you're talking with a new client that's looking for a good reason to do business with you, they need to see that confidence coming through. I've had a chance to speak with everyone that's joining with us right now, and I really am proud to say to you, wonderful ladies that are here tonight, I've seen poise with all of you, and I congratulate you for having it. So thank you very much. My job is to be assertive and to motivate. If I step on your toes, it's not because I'm mad at you. It's because I want you to become better entrepreneurs. And to do that, here's the main key for a business to stay active and sufficient. And that is find the endurance to stay in the game. Staying in the game with entrepreneurship is about winning the game. It's not about making $1 billion or being number one in everything you do. Entrepreneurship is being there year after year after year with a group of customers that stay with you, give you repeat business, and that you can feel confident in what you're doing, and that you're going to be able to stay in business and feed your family and do what you want. What are one of the main keys for new businesses? Learning the real fundamental fact that there's customers out there buying two things that they want and things that they need. And when you're offering different services, it's important that you have a diversified list of services where you offer folks what they want as well as what they need. That gives you the chance to have the customers to come in when they need something, and if you have the right profit centers, while they're there, they'll see things they want. If you have things that people want, when they come into you, they'll see things that they need, and therefore your sales will just go up and up and up because you've been smart enough to do that. Okay, we've been working all along with our 40 drill skills. That was one of the handouts that was sent to you with different video links that you can go to. Brooke, thank you so much. On your first night, you took these 40 drill skills and rewrote them to make them apply to your business. I was very impressed with that, and I hope that it's helping you. So let's wrap them up tonight. We do about 8 each time. So tonight we're going to start out with number 33. Piece of advice. When you have a chance to meet that customer, to have a conversation with, to offer a greeting, don't be lazy about it. When you have a chance to meet that customer, get up out of your chair, stand up, smile, welcome, hand out a handshake, let them know that you're excited about the opportunity to meet and greet a potential customer. It makes all the difference in the world if you do that. Through the years, I've noticed lots and lots of times people that do this, that they're sitting at a restaurant table and a potential customer or associate comes into the room and you see you don't have a chance to greet them. Get up, show enthusiasm, give them a hug, give them a handshake, be glad to see people. And it's the difference in, yes, you're important to me, and oh well, it's just another minute that's ticked away. Show the enthusiasm, leap, and make them know that you think that they're important and they're important to you. Next, keep your eyes open in your business for the next hot thing. What's happening around the corner? What's going to be able to help your business grow faster and better? What's going on? What can you do in your bookkeeping business to this new service you might be able to offer to customers? Are you offering working out of the office skills, or looking after different processes that your customers might need? The different type of flowers that truck is growing. What do the local florists really want? Maybe what can you do unique to give them something at a really good quality and at a really good price? What's new on the horizon? It's kind of like when you watch people surfing out in the ocean. When they're surfing, they want to stay on the front of the wave. They want to be able to ride that wave for the longest way. So you have to be aware of the fact of what's happening, what's coming up, because if you're just sitting back riding behind the waves, you're not going to get the advantage of any potential greater profits or new customers. So keep your radar on to see what's happening. I want you to know that, and we're going to talk about it tonight big time, that forecasting is a word, but structured forecasting is an action word. And as we talk about forecasting in our business, it is really, really important that you have this as a skill that is constantly playing. Murphy's out there. The old curveballs that Murphy throws at us are always headed towards us. Pitfalls may be in our path, and unpleasant surprises and unexpected expenses. We want to be forecasting that possibility is right around the corner. And when you're doing that and you have your risk management tools in place, you can avoid getting hurt really bad when those curveballs are coming your way. You can forecast how a negotiation will go. And really great negotiators have one thing that they do that sets them aside from everyone else, and that is extreme preparation. Being prepared before you get into a negotiating situation is the key to coming out of it successful with a win-win situation for you and for your negotiating partner. Now, who is a negotiating partner? What I mean by that? Most of us, before we get there, are thinking about, well, this person I'm negotiating with, they're my enemy. I mean, they're trying to take my profits away or trying to be better than I am in one way or the other. They're trying to get the better deal. If you're going into a negotiation with that mindset, you've already shot yourself in the foot. I want you to start thinking about the mindset of thinking with people you're negotiating with, your negotiating partners, for a win-win situation. That way both sides win. And if you have that attitude, you'll have a lot better chance of finding common ground in the negotiation and closing a better deal. The saying's been around a long time, but it always needs to be reset in these classes, because as we want sustainability in business and building relationships with our customers, we have to keep reminding ourselves that people don't really care how much you know. You may be the smartest dude on earth. People don't really care how much you know until they know how much you care. If you don't care about them and their well-being and their success, why in the heck would they care about yours? So let's just remember, be humble. Know that, yeah, I'm sure you got a lot of sense. I'm sure you've been around and you know some things, but people don't really care about that until you convince them you're listening to what their needs are and you care about what's happening with them. That's the key to building the relationships that we all want to do. So as I was just saying, why should your employee really want to help you reach your dreams and goals if you don't care about helping them reach their dreams and goals? If you're not interested in their children, in their well-being, in where they want to go with their business or where they want to go with their life, they're not going to care about where you want to go with your business. After 62 years in business and over 2,000 employees in my history, I'm glad to tell you that I've learned this one employee at a time. The more you show that employee that you're going to try to help them in their life, they will always try to help you in your life and not be always trying to jump the ship to make 25 cents more per hour or another $15 per week. Caring and building relationships with your employees. I'm not talking about romance and things like that. I'm talking about genuinely caring, human being caring for each other, golden rule type caring. It'll make a lot of difference. Your dreams are important to you, and your employees' dreams are important to them. Help them get there. What am I? I can give you an example. I had employees that we'd have a dream, we call it the Dream Manager Conference. Had employees that their entire family for generations had never owned their home, had always rented or sharecroppers or whatever that situation was. And my employees just continues in that path. And when I asked them, what will they most like to do in the future, many of them would say, Steve, someday I'd like to own my house. And I said, well, let's start working towards that. Let's find a house that's affordable for us. Let's see how much down payment you got, see what we would need maybe to help you, how much that payment would be. And then I would work with them every way I can. As long as they were staying working with me, every month I would contribute to their house payment or contribute to that down payment to make it happen. And over a period of a number of years, I think I had 6 employees that ended up in their own homes for the first time in their whole family. Sometimes their dreams were, I'd really like for my kids to be able to go to college, but I just can't afford any tuitions or books or things like that. I'm an hourly wage employee. And I said, well, let's do this. We set up a plan at carverequipment.com where anytime an employee bought a tuition bill to me, or a book bill or a tuition bill, I'd pay up to $300 on any bill they bought to me. And people that were going to community colleges, especially back then, that covered a lot of the expense. But even if they were going to Duke and had a $20,000 bill, they could count on $300 from those Steve-O. And I guess we wrote hundreds of checks to employees through the years, and man, it really helped them, and it really helped them stay with me. And we still just feel like family. That's the way you ought to do it. Care about your employees and help them when you can. Number 39, and now we're getting into a season where it's a big time. If you watch TV, you're seeing all these political commercials on television. Goodness gracious, there's too many of them. But it brings to mind what I want to talk to you about, because as an entrepreneur in business, nothing is more important. Nothing is more important than integrity. And we seem to be losing that in today's world. People seem to be able just to stand up and talking to the world, talking to the public, telling lies after lies after lies after lies, and folks are just letting it wash over and say, oh, that's just them, that's just what they do. Well, let me tell you, if you're in business with somebody like that, they're going to screw you. If someone's going to lie to you, you don't want to be doing business with them, because Entrepreneurship and good business and the Academy of Entrepreneurs and Associates is built on trust, on having character. And no matter how much charisma you got, no matter how much charisma a political candidate's got or a preacher or whatever, a charisma gets you excited, but it does not replace character. So as entrepreneurs, I want you to find that integrity and take pride in it. That by golly, you're living in trust and truth, and you're not going to compromise on that. Yeah, sometimes it's a lot easier to take the broad road instead of the narrow road. Take the path of least resistance. That don't cut it through good and tough times. Maintain your integrity and hold on to the character, and look out for people that are trying to promote themselves with charisma and nothing but bad news behind them. Okay? That's enough soapbox for me, but through the years it's made a big difference. Lastly, someday you're going to have lots of employees. I just know it. You're going to have a business and you're going to be working with those. I want to tell you that very seldom have I found that anyone ever quit a pretty good job. People just don't like to quit their jobs. If they got trained in it and they know what they're doing, they're comfortable with their fellow employees, they really like to find a way to stay there. I mean, that's a comfort level. But they'll quit a bad boss in a heartbeat. And sometimes I have my entrepreneurs that have started their business and they tell me several years down the road, Steve, my business is good, but I just can't hold on to employees. I can't find people that want to work, is what they say. And when I quiz them, lots of times I find out that maybe, just maybe, they've got a manager that's overseeing some of their employees that's running them off. I said, have you checked out, have you actually talked to them, brought them in and see if maybe it's their supervisor that's making them leave? Not you, not your business, but if somebody's needling them and being a taskmaster and not treating them humanely or like they care, they're going to go. So, word to the wise, for a lot of years, you be a leader, don't be a boss. You be someone that guides people and helps them get to a better place, helps them move your business forward. If you're going to be a boss, you're going to be a taskmaster, you're going to be an a-hole, then indeed I can tell you you're looking forward to losing lots of employees through the years, and it's the most expensive cash flow problem that small businesses have getting started is replacing employees time after time after time, because not only do you have to pay for their training, you have to pay for their mistakes as they're being trained, and indeed all that eats up your profits. So learn how to hire the right people and keep the right people, and indeed it will be a good thing for you to do that'll help your business be more profitable and a lot happier through the years. All right, it's football season, it's basketball season, and by golly, and the World Series has started in baseball. If you're sitting in the stands and thinking about getting your business started, it's time to jump on out there and get in the game. Entrepreneurs need to get in the game. Start marketing your business. Get into Facebook and web pages and YouTube videos, do testimonials, do your mission, vision, and promise statements in your business. Have you done that? Have you done that, Rosa? Have you got mission, vision, and promise statements? See, I'll pin it right on you here. And you got videos out here, business cards. I want to see copies of these business cards coming at me. There's a few things that every one of us can do as entrepreneurs to really help move our business and go forward with it. Get involved, make some things happen, and get in the game. That's what I'm encouraging you to do tonight. Our main topics, of course, are the basic, really basic and important business skills of bookkeeping, forecasting, and negotiating. So let's kind of jump in that direction right now. Your handouts are going to be really important because in those there's one on that's 21 tactics employees of negotiating, body language related to negotiating, and the importance of nonverbal communications. We're not going to have time in the session for me to dive deep into that, so I want you to start reading that. I will mention on these subjects, though, in our next course that's getting ready to start next week. we'll devote a whole evening and go deep into forecasting and negotiation with a lot of exercises and examples of how that you can do it better. Bookkeeping, familiar subject for some of us, no doubt. What is the bookkeeping? A business owner needs to know on a monthly and daily basis what's going on. Accountants usually are not able to tell you that, but the bookkeeping is going to focus on that monthly and daily work, and it's going to be really important for you to be able to put things together. The other accounting role in business is generally done by the accountants, and that could be just an accountant, or it could be one that's got 3 letters in front of their name, CPA. CPAs are more training, more skills. They carry more weight when talking with tax officials or in the court, but accountants are great people too. Just if they haven't got their CPA, that doesn't mean they're no good. It just means that maybe they can't carry you through certain doors that you might want to go to. But accountants in general look at the big term. At the long term, they look over the bookkeeper's shoulder and take the bookkeeping information daily and monthly and kind of mold it into what's happening for the whole year, for the whole season. They look at those monthly totals and compare them to years past and such as that. They take them and prepare your annual financial statements, your federal tax returns and reports. They kind of dive into what's happening with the officers and the stockholders and with different issues that come up. In general, accountants look at the long term, at the big picture. Bookkeepers, on the other hand, are really focused on what's happening daily, what you're doing with your daily invoices, what you're doing with your daily check writing. It's the cash flow thing. So if cash flow is an issue that you really haven't got a handle on, who's going to help you most in your business? It will be the bookkeeper, no doubt. The bookkeeper's going to help you. They're going to look at your financial transactions that are going on every day, your debits and credits, the invoices. Sometimes the bookkeepers actually produce invoices for you that you send out to the customers, and they also receive invoices that you get in from your vendors and manage all of that by posting them in ledgers or paper logs or such as that, or into the computer. We have a lot of folks who start out, of course, doing their own bookkeeping. Some of them just on their own pads, one pad at a time, one day at a time, and that is just fine. There's nothing wrong with a startup business owner getting a handle and just listing everything down. I'll tell you right now, there are times that even in my business, and it's not a small business, sometimes I'll get my pad out, look at my checkbook, and just see which accounts are doing this and that. So don't be afraid to put the pen to the paper. That's what I'm saying. You don't have to be a QuickBooks quiz person to understand my basic bookkeeping, which is the whole purpose of this presentation tonight. I want you to grasp on bookkeeping is not just about pushing information into a QuickBooks software. A lot of folks think it is. Sometimes your bookkeepers also look after your payroll services. Years back, they always did it, but now there are firms that just do payroll services, and that's a pretty good business to get into, especially if you got a bookkeeping background. You already have that information, and lots of times talking about new jobs to do for your potential employers or for contractors that you're serving is just do that bookkeeping function. And it's a good side business or a good side hustle for a lot of bookkeepers to do that. The accounting cycle, the cycle that the bookkeepers work with, and what I want you to know as an entrepreneur is, generally a bookkeeper has got the easiest job in the world. There's just no doubt about it. It's so easy, nothing to it at all. You agree with that, Rosa? Nothing to it whatsoever. So what I would suggest that you do is get over that, because I certainly am. But I want you to understand basically the business. That's where my cursor is moving around on the screen. I'd like for you to put a 0 in your mind right here on the other side of transaction S. And then over on this front side of it, where the arrow is coming to, put another 0. And I'm going to tell you that we want to take our daily work. I'm bookkeeping now. I want to take my daily work and start out with a big fat 0 at the top of my page. I want to take into consideration all the information that comes in on the invoices that where we serve customers, where what we've sold, what we got for it, how much we were paid for it, how much money came in, what it took to put that product for sale, separate out the different things, work it around, take all the little numbers out of it that my boss wants me to give him a report on, and then I've got to add it all back up to make sure the little numbers equal the big numbers, and I'll come all the way around here. So at the end of the day, I'm going to put it all back together as I've taken it apart and come up with a financial statement, and then I'll close the books. So I don't start out with zero. I'll come all the way around here and I'll determine how much money I took in. I'll write that number down, and then in my businesses, I have my bookkeepers see how much money came in. I have them to make a deposit into my checking account, and those two numbers are supposed to equal. So that every day I'll see what came in and what went into the bank. And I do that the same way on my expense side. That's a basic, simple, small business startup approach to bookkeeping. So how do we get there? First of all, the main tool that a bookkeeper has, you might say, is his or her computer, or his or her QuickBooks software, or the main tool is maybe some education that they've gotten, such as that. But I'm going to tell you that the main tool to really understanding your bookkeeping system as a business owner is understanding your chart of accounts. Now, what is a chart of accounts? That's each individual topic, each individual way that you keep up with the money that's coming in and the money that's going out and other factors related to funds. Money coming in with assets, income, generally I would number those accounts. I'd give these a number for my chart of accounts. Let's see, I've got mine here somewhere close by. Here it is. I keep my chart of accounts right on my desk here. This is my money going out with different chart numbers over here. Some smaller list with money coming in, but here's account numbers right here. So daily, all through the day, I'm noticing when the invoice comes in or I send out an invoice, I'll make a note on that chart of accounts number. So when I give it to my bookkeeper, we can make sure that we can cross-reference each other. But money coming in, I would normally list as a 100 series account. I give it a 100 or a 1,000 series numbers for assets, black ink. Money going out, liabilities, I usually number that chart of accounts with 200 numbers. And other items that are related to owner equity, savings, dividends, and things like that, you number them what you want to. I usually number them 300 accounts. What in the world is all these numbers about, Steve-O? Remember when we did the business plan and we had our business models and our different profit centers that we were coming in, different things that we were making money, different things we were selling? We would number those items from the chart of accounts. That way it all ties together. What we've been doing with our business plan and our marketing plan ties right into your bookkeeping plan real neatly so that you own it. You own it. And when you're explaining this to your bookkeeper that you'll be hiring or sending the work to later on, you'll have a good understanding of what all this is about, because they won't have a clue. You see, every company is different. Every organization will put different numbers and different things, identities on their expenses. And someone that is running a florist or a farm will have a different types of income and different types of expenses than someone that is running a bookkeeping business or a farm equipment business or an internet business. So everything's different. So it's important for you as the owner of the business to have a good handle on this, so that down the road when the bookkeeper hands you your monthly report and you look over these account numbers on the side, you'll have an internal management feeling for what's going on with your money. So here we go. And remember, every chart of accounts for every business will be a little bit different, but that's why I'm encouraging you down at, like, use the 100 numbers for black ink, the 200 numbers for red ink, and such as that. That way you have some type of uniformity about what you're doing. Whether you're keeping your journals in a computer or on paper or on both, and usually as you're first getting started, there'll be a little bit of both going on, and that's really, really important. Now here's a simple chart of accounts from maybe a small building supply business where they set up their charts and a scale here to talk about just like daily sales. Everything that goes into your bookkeeping system starts with an invoice. This is on the money coming in side, the revenue side. Invoices are the bricks that build a building, and indeed invoices have a number. Every invoice needs to have a number and a date on it. And a key as you're setting these up and you're writing invoices and numbers, remember you want to try to keep your invoices in numerical order. Have an order to them. And you want to put a date on them so that not only when you need to go back and find a record for a customer down the road, and they're always asking for some type of history, that you're able easily to find certain invoices for your customers or for whatever that you're trying to audit in your books. So lots of times people will not only put a date on it, but they'll use the date as the invoice number. That's just fine. You can do that. I prefer not doing it, but it is something you can do to make sense. So if you were writing an invoice today, what would that invoice number be? 10/17/24-1. And the next invoice you wrote would be 10/17/24-2. All right. Or you could just start out, if it's your very first invoice in your business, 5 zeros and a 1, because you're planning on writing lots of them. But anyway, make sure you've got invoice numbers if you're keeping up with them. So this is all going to end up on paper. I hate to tell you that maybe you didn't want to keep up with all this paperwork, but in reality, at the end of the time, you're going to have these numbers on your computer files, in your bookkeeping files, and indeed you're probably going to have paper invoices as well, just like these that I've got on my desk right here that I've been writing for this month. So here, got invoice numbers at the top and dates at it right here. This is my invoice number. The last one I wrote today was number 160615, $160,615. That's right, many invoices in it. So we've been around a while in this business. But so what are we going to do now? Let's just see that. I want you to remember to write your invoices out. Let's take an invoice and kind of tear it apart. This is a pretend invoice because Rosa has started a store where she's going to be selling gifts. Christmas gifts. And one of the things that she's going to be selling is candles. She got a big business started. She's planning on selling a lot of candles. So she's ordered in half a truckload of candles to sell in her business. And Sarita has written up an invoice and will turn it in. And here we go. Let's look at this invoice that's been turned in. Well, first let's look at that invoice number, 12/12/16. Well, that looks like maybe someone that was writing an invoice on December 12th, 1916, right? Or 2016. So that's an example of different invoice numbers that you might want to see. And anyway, we got that up there for it, and she sold that box of candles for $8.56. 56 cents of that was tax, North Carolina sales tax. So let's just say right now, and get it out of the way, that tax money is not ours. It is not going to stay with us. It does not belong to us. We are forced to collect it by the state of North Carolina and keep up with it, and then on certain dates send it on to the state. We're not going to keep it. So a good plan for any bookkeeper, any business owner getting started is to say, I'm going to pigeonhole the tax money right now. I don't want to put it in a place where I'm going to be spending it thinking that it's mine. Because when the tax money is due, you need to be ready to send it in. No excuse, no got to borrow the money, need a few more days. None of that cuts it. You do not touch that tax money. You pigeonhole it so you can send it in. So we take that out of it. So now we basically got an $8 sale on that box of candles. So Rose is picky. She really wants to keep up with the individual ways that she makes money in her business and keeps up with different plans she has. So she's going to ask that bookkeeper to pull out certain numbers to help her better manage her profitability. So Rose is pulling this apart now, so here we go. $2 of that was the actual cost of the box of candles. $2 was her invoice. 55 cents was paid towards freight to bring it in. So we don't keep up with how much our freight costs are. In the store, we're going to pay our sales clerks 10% commission when they sell stuff. They're working on commission, 10%. So that's a generous 80 cents out of that sale is going to be earmarked to go into salesman commissions. Now, some people would have every salesman in the store have a different account number right there in their chart of accounts for the different employees, but we're just going to put it all in one place. 80 cents for commission. Now, we've got a customer loyalty plan at our store, which means that a customer comes in, they're a loyal customer, they get a 5% discount. So to fund those 5% discounts and to keep up with it, I'm going to take 40 cents out of my cost there, or add 40% to my cost. Also, we have put together a really good marketing campaign on these individual candles. In other words, we've earmarked 6.5% of our cost towards marketing those candles. So we're going to earmark 52 cents to keep up with how much investment that we're making into our next marketing plan by putting that 52 cents back into the column there. Adding these things up that we wanted to keep up with, we can see that our cost of that box of candles was $4.27, or 53% cost. So our gross profit, no, let's call it profit. Let's call it margin. We talk about profit when the whole report is over, when the whole monthly report is over. Right now, just because you've made a little money above your cost, don't call it profit yet. Let's just call it margin. So our margin there was $3.73, or 47%. Now, 47% sounds like a big number, right? Profit-wise, and it is a good number. Heck, man, I'd love to have everything I sell making 47%. It doesn't do it. But we got to look back at that $3.73, which is a small number in the big world. What is all this going to tell us? First of all, it's going to tell us how much money that box of candles brought in, but how much money it cost us to get there. Now, there are other costs involved that are not listed here. The cost of the insurance for your business, the telephone bill, the rent that you're paying for floor space, and how much floor space do these candles take up. There's a lot of other considerations, but the basic cost of this sale is what you're after there, and that's an important number in anybody's monthly report. I brought in this amount of money, but how much did it really cost me on that particular item? You need to know this when you're doing your business models. Remember in the business plan when we put together everything, the different things that we're doing to bring money in and deciding in what's going to bring us up in enough money to stay in business? When you break your products down like this, you actually see how much volume, how many turnovers that you need to do on particular items to generate enough money to justify selling the product, to justify how much inventory that you've decided to put in. That's why this is important. And I can tell you right now that most new entrepreneurs don't have a clue about this. Most bookkeepers don't have a clue about this. But I can tell you as someone that has handled these numbers all through the years, these are some of the most critical numbers that you'll do with when you're buying and selling products. Not so important when you're selling time for money. But when you're selling products, this is critical to know how much volume you need to have, how much space you need to have, and what you need to do. So here we go. But I'm going to tell you right now, we got a little problem. We're going to take this invoice breakdown and then apply it to our bookkeeping system. But here's a problem. When I sold this box of candles, you see I was supposed to collect 56 cent tax, 7%. but I screwed up. And sometimes I don't write so good and can't read my own writing and such as that. I didn't collect but 46 cents. Should have collected 56 cents, didn't collect but 46 cents. So in every invoice, in every business, there's always a chance that someone put the wrong number down. Honest mistake, but we make mistakes as human beings. Whether we're typing on the keyboard or writing with hand, we hit the wrong key sometimes, and there's mistakes there. And the bookkeeper is the one who ends up having to deal with that. Bookkeepers usually don't make many mistakes themselves, but they have to clean up a lot of mistakes from everybody else. So our heart goes out to them because it's important. So how does that happen? How does that work? Well, let's go back to our journals, to our cycle. And this represents making entries into your paper journals or into your QuickBooks entries. We're going to take that invoice and all of our other invoices, one at a time, all of our other invoices, and we're going to go through and we're going to take these journal entries that we just talked about, and we're going to post them. That means we're going to plug them in or write them in. And then we're going to add them up to see if all of our little numbers equal all of our big numbers. And that's what we're after. The numbers need to work out. And as we do that, we'll have them on a worksheet. We'll work that out. Then we find the mistakes, like the 56 cent and the 46 cent. Well, the bookkeeper is going to have to pay 56 cent tax, even though we didn't collect but 46 cent, because the sale is what the tax is based on. So that's got to be fixed. That's got to be changed. That's got to be adjusted. So she will change that 46 cent to 56 cent and make an adjusting journal entry there that we were 10 cent out of balance, and explain why on her entry. Now, this is an important thing to remember. The adjusting journal entries, whether on papers or in the computer files, and there's a place for notes on the computer files, the adjusting journal entries are the bookkeeper's get out of jail free card. It's important for the bookkeeper to maintain these adjusting journal entries and keep copies of them. Because if something goes wrong, and you read about it in the newspaper every so often that a bookkeeper in a small business has been accused or arrested for stealing money from the company, for embezzlement, they call it, for this or that. And indeed, it's a big deal. So where does the auditors, where does the investigators go look first? Right at the bookkeeper's work. But if they have got their adjusting journal entries in right and explain why the books have been changed, different notations are made, that's their get out of jail free card. Lots of times the ones that are getting in big trouble didn't do all this. They just kind of what is called cooked the books. But these are important. A bookkeeper that's changing jobs, maybe it's been at one place for a long time and such as that, or even if it's for a year, should always keep a copy of their records, which include the adjusting journal entries. Because you don't know, maybe 5 years from now, you're called into an audit and someone's asking you hard questions, and your answers are mostly found in your adjusting journal entries. So keep that in mind. Okay, everything worked out. So you made the change, and we're going to pay that extra 10 cents and collect it from me. I made a mistake. I'll pay the 10 cents up and make the pot right. So as we put it all together, we're going to call that our financial statement and close the books for that day. We're moving close. And I'll just pull the number out of there. Today we took in $1,450. That was our income, our black ink. So right beside that, I would ask my bookkeeper to go ahead and make a deposit for $1,450 and make a note of that and staple it to a sheet just like this and hand it to me. Then me, as the owner of the business, could see how much money came in, and I would have a sheet just like this for my checkbook, the money that went out, and I'd be able to see what my cash flow is doing, know where I'm at all the time. Cash flow. That is a critical dimension for a new business owner, to always have an awareness of your cash flow, and this is the best way to get there. How can you bring some security and confidence and safety into your business now? I like to talk about the separation of duties. when you're handling money in a business. First of all, let's talk about the checkbook, the money going in and money going out, whether it's written by hand or whether it's all computerized and such as that. Most small businesses are still writing checks by hand otherwise, but either way, you can take safeguards to do these things. The people can write the checks for you. The bookkeepers can write the checks and list them and all like that, but maybe you don't allow the bookkeeper to sign the checks, that you reserve that as a business owner privilege. So that's one way to see every check before it goes out, to give you a sense of security. I'm not saying that people are crooks. I'm not saying they're dishonest. I'm just saying as a business owner, you need to put security measures in place to help encourage people to stay honest, and indeed that's a good thing to do. Requiring 2 signatures on a check is another way to have a safeguard. That way one person can't manipulate the books by themselves. Someone has to go along with them. On large checks, sometimes even whoever's signing otherwise, but sometimes on some real large checks, and it's up to you to determine what that number is, then you might require the president and or the vice president to actually sign the check or initial it before it goes out. That's another safeguard you can do. Having a stamp close by that so that when you're getting a check, here's one I got in today. This check came in this afternoon from Arizona for $6,527. The minute that check came in, on the back of it, I signed it for deposit, let's say for deposit only, and signed my name on it, and then stamped it with our bank stamp. What that does for me is to say that even if someone breaks into my office tonight or knocks me in the head and takes that check, they can't cash it. If it says for deposit only, you got your stamp on it, they can carry it to any bank they want to carry it to, and it will not be cashed. And that's one reason that why even when you try to do a check by mail, they require that you send them a copy of the back of it as well. So always keep that in mind. If you're taking in money, protect yourself by writing deposit on it as soon as you get it and stamping it. I've done this with my employees in different stores through the years, and we've never had a problem. But I've got a lot of friends through the years that I know have had big problems with that issue. Another thing I'd recommend to you, that as your incoming mail comes in, the vice president or the president and the owner of the company should open mail. Yeah, it's a task and it gets old, and sometimes you really don't feel like it every morning to open that mail. But mail that's related to your bank statements and invoices coming in, you need to see them first. That way you'll have a protection to make sure your bills are being paid. If something is past due that you thought was paid, you'll see it when it comes in the mail as past due. I suggested you take this at heart. Your bank statement, maybe you're not reconciling your bank statement, but maybe your bookkeeper is or someone else. But even if you're not reconciling it, I suggest that you open that bank statement, look through it, look at the signatures on the checks, make sure that you're familiar with them. Take a good look, shuffle them around a little bit before you give it to your bookkeeper. That lets them know that you've taken a look. It helps keep everybody honest when you're doing that. Especially credit card statements now are becoming a big thing. You want to make sure that you open those too and see how that money's going around. Good news is with QuickBooks and computers now, you can pull out all different types of information charts as your bookkeeper goes to work, different charts about how much percentage is being paid in wages or leaves or whatever. It's amazing what the computers will do. So if you're a person that would like to see charts and graphs, in today's world, you can certainly do that. QuickBooks will hand that right over to you. Now let's talk about payroll for a minute. Payroll is a very, very important factor in every business. If your bookkeeper is doing your payroll, I want to give you some words to the wise. Don't put your bookkeeper in a position to argue with employees about this hour or that hours or how much what this deduction was about and that deduction is about. The bookkeeper needs to have a privacy situation where that they are responsible to you and not to the individual employees. If an individual employee wants to talk about a problem they've got with their check or their deductions or withholdings, then indeed they need to talk to their manager or with you about it first, and then you get a handle on the situation and discuss it with the bookkeeper, with or without the employee. Don't put the bookkeeper on defensive. They're just there handling the numbers in a way that you've told them to do it. Help protect them and work with them to avoid employees and bookkeepers getting into arguments and debates. That just does not do anything for morale, and it's the best way to get rid of a good bookkeeper with employees that are insinuating this and that to them all the time. So, word to the wise. Now, if you got questions related to what we've been talking about, put them in the chat board, and tomorrow I'll answer by email if I can, or you can certainly break in anytime. Just raise your hand or turn your speaker on and let me know. Let me get some water here. I see that my friend Jimmy Packer from Garland, North Carolina has joined us. Welcome, Jimmy. Glad to have you on board. We saw your picture a little bit earlier and hope things are going well with you. I'm headed down your way tomorrow afternoon, and I hope business as well. You'd like to play checkers or chess? Well, we're going to move into a conversation now that's kind of related to the game. In checkers and in chess, when you make a move, you are anticipating with this move what the other person that you're playing with, your negotiating partner, what they're going to do after you make your move. Maybe 2 or 3 moves ahead of time. So we're thinking ahead. It's chess type strategy. In negotiating and in forecasting, that's the same process going on. Forecasting we'll talk about first, and man, it's been in the news the last 3 or 4 weeks big time about forecasting, especially about the weather, so we're all interested in that. And if indeed you're going on a cruise or on a trip somewhere, you're all about getting interested in the forecasting because you want to know how the weather or the sea conditions are going to be. If you're into farming, your forecasting is in your mind all the time, whether in dealing with your animals, making sure they're in the right place at the right season, or your crops are being getting the irrigation that they need or the water they need, or being planted on the right dates. And yeah, we even go to a farmer's almanac sometimes to help us with the forecasting. Well, in business, we got some farmer's almanacs too that I'll talk about a little bit later. Lightning strikes a big deal. Now, if you're in fighting wildfires, you're going to be very interested in where the lightning is striking and the fires that it may be starting. That's a big deal in forecasting, right? So let me tell you that in business, if you're not doing the right kind of forecasting, this is the sign. This will end up in front of your business. GOB, going out of business, means didn't forecast too well. GOB, going out of business, equals poor forecasting. Just know that that's a fact. And lots of times when you see these signs up or you see a business closing up, if they had been in this lesson tonight as you are and had practiced good forecasting, there's a good chance they might have not had to go out of business. What are we forecasting? If we're selling products, we're going to forecast turns. T-U-R-N-S, turns, short for turnovers. We do not make money selling products until something is sold. We don't make money selling products just because we've got a large inventory. We don't make money selling products just because we've got a big warehouse or a great marketing campaign or a lot of employees or a great salesman. You make that profit dollar when something is actually sold, and not until then. And if you are eaten alive with too large an inventory and you've got all your cash tied up in inventory that's not turning, that's a bad thing. It will put you out of business. If you're paying insurance on $2 million worth of product and you're selling $100 worth a day, then your insurance cost is going to eat you alive. So we need to forecast in accordance with how our turnovers are going to be running. And we need to plan our marketing campaign to generate those turnovers. And we need to know how many turnovers we got to have by talking to our bookkeeper, as we just talked about earlier. It all ties together. It all ties together as we connect the dots in a business. The same applies with staffing issues. We want the right people in the right place at the right time. And we want them to be trained so that when we have a chance to serve our customers, they're not making mistakes and costing us money or making people go away because of their bad attitude. Staffing issues have to be forecast and worked on really, really hard. Now, we talked about those candles, the truckload of candles that Rosa bought for her business. Indeed, she ordered those candles and she had to forecast that we needed the cash in on hand when the candles came in so she could pay the bill. And when she paid that bill for all those candles, did it leave enough cash in the kitty there to pay her regular bills? Managing and forecasting cash flow is huge, and we just have to do it and know that it's coming. Those are a couple of the things. Forecasting risk. Risk is maybe the biggest issue that I want us to focus on tonight. It's the thing that a lot of us just don't know how to do because we've never been there to do it. So I'll say to you, if you're starting a new business on your own and you haven't talked with someone about what are the risks involved in what I'm doing in my business, and you don't know because you hadn't been in business before, then it's time to talk to someone that can help you list down these risks, because you want to write down an actual list of what you need to be afraid of. Now, let me tell you, if you're going out to go bear hunting or lion hunting or snake hunting, you'll take the time to make a list of all the safety stuff you need to have on board, or the weapons you need to have, or the nets, or if something happens where you don't go to get help. The same thing applies with starting a business. You want a list of the hazards and exposures that you're going to want and plan to have risk management tools in place. So where can you find this information out? First of all, you can find an old fellow that's got, the gentleman or lady that's got white hair that's been there and done that and asked the questions. Folks will be glad to help you. Or you can go to an independent insurance agent who helps independent businesses. Indeed, every insurance company that insures businesses already has a list of all the risks that are involved in your business. They've got a list ready-made to print out. How do I know that? Because when they write insurance for a small business, they automatically give you a list of risks and hazards that they want you to avoid. And the better you are at avoiding those risks and hazards, the lower your premium is going to be. If you're sloppy about it and ignore the risks and hazards, the higher your risks are going to be, or you won't be able to get insurance at all. That's why it's important. Risk management is a big deal, and it's all about forecasting in advance. So keep that in mind. Any way I can help you with that, just send me a note, and I'll be glad to do it. Knowing that as we move down the road, we're going to be forecasting that to get there, we don't have to do marketing. To have the volume we need, to have the continuous flow of customers coming in, we have to have a strategy in place. Coming to these webinars and working through these courses will help you develop the mindset with strategies to get through them. That's why they have value. What is the primary goal of forecasting for someone that's selling products? It is for me to have the right product, now the right one, in the right size and quantity, style and in the mood popular, to have a retail price on it that's very reasonable, the highest price that I can put on it. So how do I figure that out? Well, we can help you with that. In one of our presentations in a couple of weeks is going to be on pricing products, and we'll go through how to create that highest advertised price that gives you plenty of room to make money and to negotiate. But we want to purchase this product at the lowest price possible, so I'll have the most room for margin. I want to purchase it below fair market value so I can sell it above fair market value. And then I want good risk management tools in place so that if I don't sell all this stuff that I'm getting ready to order, that I can liquidate it and not lose money on it. That's right. You know, I went to a Lowe's store night before last, and here it was in mid-October, and in that store it was full of Christmas stuff, Christmas trees out the yin-yang. I mean, all Christmas stuff. And they already had prices on it. And I don't tell you right now, the prices on it seem very reasonable. But the last week of the year, or 2 days before Christmas, they're going to be putting 50% sale numbers on that stuff, 75% off, all types of sales. Well, I don't tell you right now, they're not going to lose a penny on that Christmas product. At 75% off, they're not going to lose a penny on these Christmas products because they've been in it a long time. They know what the retail price needs to be now, so that at the end of the season they can liquidate what's left at 75% off or 50% off, and their bottom line is still going to be black ink. Now, it's a fact that at Walmart and Lowe's and all these other big stores have been doing this for years and years and years. And the products that they put on hand today for Christmas were probably ordered before last January. That's forecasting, my friend. And that's negotiating good prices so that they can have the right product at the right price at the right time, and if it don't sell, liquidate it. We all need to strive to do exactly what they're doing. It's the right thing to do in our businesses. Now, if we're selling time for money, then our objective is to make sure we've got a calendar and we're working hard to put the right people in the right appointments every day so that we meet our budget requirements. Same basic theory. So it's good risk management to do the right forecasting. We want to learn how to negotiate and close deals. Maybe you're new in the business world and have never negotiated or closed a deal in your life, or maybe just a few. I know that one of our friends that are with us has just negotiated and closed a real good deal on some real estate, and just real proud of that. But it takes a long time to work through those issues and get the deal where it's good for both sides, that you can move forward. These are tips that we're going to talk about tonight, but in a couple of weeks we're going to get into this really deeper into how to actually do some samples and practices on them. But what you want to do is be prepared. You want to know before you get into the discussion, into the negotiation, what your target goals are. What can you afford and what do you want to afford, and how low do you think you might be able to buy this product or this situation, and what is the maximum that you feel like you can pay. You want to know these numbers, lows and highs, before you get there. Pricing. You want to understand the best terms for you. Have you got the cash ready, or are you going to finance this deal? And if you do finance it, how long do you need to finance it? And what would that monthly payment be at the highest price you're willing to pay, and can you afford that? Is there interest involved? What is the current interest rates? What is prime? In other words, if I go to the bank and borrow this money, how much will it cost me? And if the person I'm working with is going to finance this for me, how much are they going to cost me? Are they going, maybe I'm going to pay a little bit more for the purchase price, but they've offered to finance it for me for a long time at zero interest. Now that's an incredibly great deal, but still you have to work it out in advance to know if you can even afford it if interest isn't added. Is it an investment that's going to pay for itself? That's what we're going to be asking. So you see, things feel good at the time. It's a good idea at the time. I'm going to jump right in here. I really want that red pickup truck. Oh, man, I'll look so good in that, and it'll be so much fun to drive it. But you know what? It's going to cost me $700 a month, and that will just wipe me out. I won't be able to buy groceries if I'm paying out $700 a month. So think about it in advance, because a good salesman may try to talk you into it, whether you can afford it or not. So you have to do your own preparation. We're moving into a situation now to talk with some folks about a negotiating situation. It's important, even when you walk in the room, where you sit, how you position yourself, what is your posture? Are you coming across as someone that's come in with confidence, that you've got a plan, but you're not being a show-off know-it-all? I mean, you're humble, but you've got confidence and you feel good about talking, and you've got your plan prepared. You're not telling any secrets in advance, but you're positioning yourself for a positive conversation. That's important. And you just, every little factor can make a difference. You're bringing the documents with you that's going to work this deal out. You've made your notes and you've written them down in such a way they're a work of art. Maybe typed them out on the computer and printed them. So you're bringing a document that's ready to do business. Not just some hand scratch on a pad, not just something to get started with, but you're well on the way to documenting this deal that you're thinking about. That's what I'm calling a work of art. That in advance, you have prepared these proposals in such a way that you can make some minor adjustments or fill in some blank lines and close that deal. Because when you're negotiating, there'll be some talking time, there'll be some questions and answers, and then there'll be times to close this deal and make it work. And you want to be ready when that time comes. Frequently asked questions. Okay, here's some questions that I need to ask, and here's some questions they're probably going to ask me. Let's write them down and think about it. And when they ask me this question, what is my answer going to be? And will this answer give me room to negotiate? Will it show confidence? Will it show what I know what I'm doing and show the right direction? Will it give the image that I want to present? Thinking in advance, being prepared is forecasting a successful negotiation. So if I say to you, what's the best way for you to have a successful negotiation? Your answer is really good if you say, by forecasting what will make it successful. And planning and getting your plan ready. So important. Have a range, a bargaining range of what your high numbers are and what your low numbers are. Now, in our session, that's in our next course that starts next week, we'll do some actual exercises here on how to figure out if I offer this, they will probably counter with this. And when they counter with that, I'll come in with this number. So you actually work through the give and the take of a negotiation based on your forecasting and range of your numbers, so that these offers are made to help you achieve the numbers that you want and need. Sound complicated? It's really not. And you will be able to master it. So I'm looking forward to working with you with that. But you want to have a roadmap of the offers back and forth. Something nobody that hadn't been in business for a long time has a clue of. But I can tell you it's been one of my best secret weapons for a long, long time. And that is, I am prepared in every negotiation that I go into, established negotiation, things I'm used to buying and selling. I know that I have a list of secret weapons to help me close the sale. I know that I have some little things that I can offer that my competitor hadn't thought of, and it has value, but really don't cost me hardly anything. And I have planned to have these secret weapons, the cost of them, built into my asking price. So as we're talking about, and I see the customer is ready to close, that they're giving me buying signals, I'll have my list of secret weapons ready to drop out for him to nibble on, so I can go ahead and close that sale. So what are your best secret weapons? They're the value-added features. The value-added features. The things that you know about your product and what you're offering and your services that your competitors don't know and that you can add into the deal. My friend Jimmy Packer is with us tonight, so we'll talk about some secret weapons that he might have. He might have in his barbershop, real fine barbershop, he might have a secret weapon that he can say, come on down and start, let me do your hair work for you. I've got the most comfortable barber chair in eastern North Carolina. It's got extra pads on it. When you sit in my chair, you're not no longer get out. Or come on down and let me massage your shoulders. We massage, give everybody a little few seconds of shoulder massage. Or maybe we do a shampoo for you. No extra charge. We're just glad to do it. And let me tell you, I got the best TV around while you're sitting here in my chair. You can watch racing, you can watch wrestling, you can watch football, you can watch comedies. We got good entertainment while you're here with us. One thing after the other. Whether you're in the barber business or you're in the equipment business or you're in the flower growing business, you can always come up with some little special things that you can say that you can give to this customer with a deal that's not going to cost them any more money, but it's a feel-good thing. It's a warm and fuzzy, and those are the things that help you close sales. But you have to be prepared. You have to have forecast the opportunity and be prepared to do it. The last secret weapon I can mention to you when you're negotiating, and you have to forecast your ability to do this to know how important it is, so when the opportunity comes, you can do it, and the secret weapon is knowing how to capture the moment. The secret weapon is knowing how to capture the moment. And that is, you're skilled enough and you're cool enough and you're professional enough to be able to have confidence to bring some drama into the negotiation. Whether it's a smile or a big laugh or a moment of silence, or some eye going round and round, or looking right down, or your handshakes or your gestures, drama moves the world. And drama at the right moment closes the negotiation, because when you're able to get their attention, then you're able to buy some time when you have all of their attention for a few seconds, and that's when you're ready to close the deal. You help them release those anxieties. Now, next week we'll jump into this even more, but the secret weapon I'm mentioning to you is having the skill and the talent and have practice at knowing how to capture a moment when you're going after that close in a deal. Forecasting in negotiations is telling you always want a plan B. If you're planning on putting some new windows in your building, maybe you're getting ready to spend $3,000 for brand new windows in an old building you just bought. Then it's a good idea to go ahead and shop for those windows, see what your installation cost is from someone you trust. And if you think it's a reasonable deal, that's good. You write it down. But then you don't buy, you go out and see if you can beat that deal. You see if you can get just as good a deal for $2,000 or for $2,500, and you make offers and you negotiate and you go around, and maybe you will find better deals. You don't ever know what's out there until you look, because everyone may be in a different situation that's selling these things and offering one deal or another that can really tear the world up. Good stuff. But now, a word to the wise. If you find something that you decide you want to buy other than the first deal that you started with, and it's a much better deal, it's a better price, then I want to tell you to go to that person that offered you that good deal to begin with and tell them how much you appreciate it. But say, look here now, I really want to do business with you, but I just don't have any extra money to spend, and I've got a better deal, and would like to give you a second chance to look at your numbers. That's being fair. That's being a good business person, to go back to that person. You're not messing with them. You're giving them a chance to still get the business if they want it. And you'll still, in the future, give them a chance to do business. And you make that clear. That's the right thing to do. And if they meet that price and appreciate the deal and still got a good attitude about it, you don't have to make them beat it. Just get them to meet it, maybe a dollar more, so you can say to that person that you're walking away from, well, I just got a better deal. Then that's the right thing to do. And the next time that you go to those people for a quotation such as that, they'll be glad to give you a good number. And they will also kind of think in the back of their mind, well, he's probably no shop, so I'll give him my best number. At any rate, just something to think about. But have a plan B before you start serious negotiating. The biggest thing that new entrepreneurs get into oftentimes is they want a deal and they would like to work with this person, and they're selling or you're selling, and so one party is saying take it or leave it. Here's the price, take it or leave it. This is what I'm offering you, take it or leave it, or this is the sale price, take it or leave it. In other words, I don't want to talk, I don't want to hassle, just pay up or leave. Well, that situation oftentimes leaves you without doing the deal. And old Steve-O here is going to give you a secret how to keep things working. The secret that helps so many professional deal closers be the best at their business is they know how to say yes if or no but. They know how to say yes if or no but. And Jimmy would say to me, Steve, man, I'd really like to buy that used pickup truck you got that you're asking $8,000 for it. I'd really like to buy it, Steve, but here's all that I can offer you right now. I can offer you $6,000 for it. You want it? So the question came to me was, you want this offer? And I'm not going to take that offer. I'm not going to take that offer. But I'm not going to say, no, Jimmy, I'm not going to take that offer. Here's what I'm going to say. Yes, Jimmy, I can take that $6,000 offer. Even though I'm asking $8,000, I'll take your $6,000 offer and be happy to do it if you don't make me put that set of new tires on there that we had talked about. Or, Jimmy, thank you for the $6,000 offer. No, I can't take it, but I will take it if you don't make me put those new tires on it like we've been talking about. And then Jamie has the chance to say, well, let me think about that. Or we're still talking. We're still talking. And that's the whole purpose for yes, if, no, but. As long as you are in the game and trying to close this deal and negotiate a win-win situation, you want to keep talking because sometimes it's not about the price. It's about how much deposit. It's about when can you deliver. What is your interest rate? What's the other ands, if, and buts that we can work through? But if you just say no, take it or leave it, it's over with, and you are not the entrepreneur you want to be. I want you to be smarter than that. Keep the conversation going as long as it goes. Now, here's the place I need to say to you. Footnote, caveat, as some people say. You don't have to take every deal. You don't have to try to please every customer because some people cannot be pleased. Some people you really don't want to have a long-term relationship because they are just hard and stubborn and will try to take every advantage of you. And you know what? After you've tried to work through a negotiation, you'll get a sense of that. And I'm telling you, as your new small business coach, it's perfectly okay for you to say, you know what, maybe you need to go buy from someone else. I'd like to be your friend, but I don't think we can do this deal. Yeah, you cannot please everybody. You can do your best, but you just can't do it. So I'm telling you, you've got the right not to try to get every deal that comes your way, even though we all need as much cash flow as we can do. So yes, if, no, but helps you keep the conversation alive until you decide you don't want to keep the conversation alive. Okay? Basic 4 fundamentals in negotiating. It's a balanced scale. You don't really want to give up anything unless you get something in return. We've started out with a balanced scale for a win-win situation. So if I'm giving up something, I need to get something in return. That's just a fundamental way of thinking. We want the other party to make the first offer. It's always good to get an offer. The negotiation starts when an offer is made. And the best way for you to be able to get a good offer coming in is to set your advertised sale price, your price tag, up high enough that gives you plenty of negotiating room. It's perfectly okay to be too high because you can always come down. But if you're too low and someone makes you an offer that's below your price, you have to say, I can't do it. So don't put yourself in that position by setting your advertised sale price up as high as you can. Next, so that you're ready to get that first offer. A word to the wise, it doesn't cost you a penny, and it's a very smart negotiating tool. And Sampson County farmers taught me this really well, and that is to say, is that your best price? Can't you do better? Don't make an offer. Just say, really, Rose, is this your best price? Can't you lower that a lot? That seems mighty high to me. I call it poor mouthing. That's what farmers have done to me through the years, and they are pros at it. We're still friends and we're still talking, and they just say, oh man, I thought that price was going to be a lot lower than that. What can you do about lowering that down, Steve? That's good negotiating. And I want you to do that when you're shopping and talking and negotiating with people. Because oftentimes, especially, even with a seasoned salesperson or a seasoned negotiator, they'll say, well, sure, I can drop it down to this. Well, you've automatically made money by just asking one question. And money is hard to make. So I'm proud of you. Be a poor mouther. Be ready and willing on anything that somebody's talking to you, even if you're at the clothing store at Belk's, or at the car dealership, or the gas station, or the meat market, and they tell you what the price of something is per pound or per dozen or whatever. Look at them and say, really? Please, can't you give me a little bit better price than that? Yeah, it doesn't make you look like you're destitute or dumb or less worthy. It basically makes you look like, I'm a pretty good business person. Let me just ask you a simple question. Can't you do a little better on that price? A little lower? Help out this old senior citizen. Help out this poor school teacher. I mean, put it on thick. It's legal. It's smart. And they will really maybe squirm a little bit, but in the long term, they'll really respect you as a better business person because you're planning on paying them and doing some business. Remember the yes, if, no, but, and do not stop the process as long as you think there's a chance. Keep talking. Don't say, take it or leave it. Now, there's 21 negotiating tactics and ploys used throughout the world, and all the negotiating colleges and all the business schools, they'll all tell you there's 21 negotiating tactics and ploys, and they'll talk about all of them, and I've given you a copy of all of them. All of them have value. But I'll tell you that most of us won't use all of them, but I want you to be able to read them in case you might. There's 9 tactics and ploys that are used often, and I want to talk to you about them. The rest are in your study guides. A fairly new phenomenon is going on, especially in the real estate market now, and in internet marketing such as well. That is, a potential buyer may call you up or call your agent up and say, I'm kind of interested in this product, but your price is way out of my line. I'd like to make you an offer that's kind of low. That's lower than what you're asking. Would you consider it? So what's going on here? The shopper is basically saying to you, I want to get a real good price on this, and I'm going to make you a low offer, so just get ready. And I'm not going to waste my time if you're going to say take it or leave it. I'm not going to waste my time if you're going to say take it or leave it. That's on a lot of people's minds these days. So when they came to you and said, I'm interested in it, but the offer I'm going to make is really low, they're really doing you a favor. They think they're sticking it in you. They think you're busting your bubble and getting you ready for a lot of disappointment. But the fact of the matter is, I want every offer to come in, and I will always say, oh yeah, please send your offer on in. I'll consider every offer, and I'll get as close to it as I can. In other words, give them some hope, encourage them to come in. That's why it's important for you to set a good high price on what you're selling. And when you're buying, when you're thinking about buying something and that price looked really high, let me tell you, you don't ever know. The person who put that price on it may be able to take 1/3 of what they're offering for it if someone comes on through with a good offer. They're testing the waters, and that's okay for them to do. But you don't need to be discouraged because you think it's just too high and out of sight. It don't cost you a penny, just a few minutes of work to make that offer and put something in gear. You may get the best buy you've ever had in your life, but you will not get it if you're afraid of making a lower offer than that high price. That's busting the bubble. Flinching. When someone makes you an offer, do what Fred Sanford in the old TV show used to be. He'd say, oh my gracious, I don't have a heart attack. This is the big one coming on. That was so low. Or you're asking too much, it's so much. It is showing physical pain or discomfort with the offer being made to you. Now, you don't have to take it as far as Fred Sanford took it, but indeed it is, whether you put your hands up by your head or you do that or you just kind of cringe a little bit, you show that person making you that offer that you're not comfortable with it, but you don't say anything. No, you don't challenge it. You don't say anything. You just send that nonverbal communication. That hurt. And if you hold it a few seconds, it won't be but a few seconds before, especially the inexperienced person will say to you, oh, I'm sorry, I didn't mean to hurt your feelings. Let me knock $500 off that card. Will that make you feel better? Let me lower that price a little bit. It works, my friend. Nonverbal communications make money for you. If you're wise and you're practiced and you had planned, you had forecast the opportunity coming in this negotiation. So now on the other side, you're an experienced person. You're doing the selling and someone puts a flinch move on you. It hurts. Well, you give them a minute to get through their act. You don't act like you're mad or really excited or whatever. You might say to them, wow, that's the best flinching move I've ever seen in a negotiation. That was fantastic. Now, can we get on? You ready to buy this thing? I got a good price on it. Just let it flow. Now, the minute in any of these situations come along, when you recognize that your trading partner is using negotiating tactics, employees that we're talking about, and you don't need to be mean about it, you just need to be subtle. You need to have poise and say to them, wow, you must have taken some real good negotiating classes. That was cool. But listen, we need to get on with this deal. I'm making you some great offers. You ready to do this deal right now? So when you let the other person notice you're recognizing that they're using ploys and tactics on you, they will automatically become closer to doing business with you because they will respect you more because you recognized it and didn't embarrass them with it. You applauded what they were doing. Silence. Another nonverbal communication to make money. Someone makes you that offer, says that to you, and you just look at them. Look out the room. You send in a message without a lot of distress that I'm kind of losing interest in this. Makes mouth movements or eyes, and women can really do a good job with this. You look at them in such a way as if, are you serious? Come on, let's get in the game. Don't say anything and just sit there. Kind of look at the door, move your hands around, and you look at them as if you're waiting for them to say something else. And when they do, it's generally going to be a lot better price than what they had offered you, or better terms, or better something. Sometimes just being quiet and kind of cutting off the negotiating for a few seconds, but still holding your ground, that's powerful. Now, we're in the world of increasing prices and inflation, and it's a really good time when you're negotiating, especially when you're selling and saying, you need to go ahead and buy this now before the prices go up. I'm expecting a price increase next week. Get your product now while I've got it. and that's a good way to get someone to go ahead and close the deal and to move them forward. The red herring, most folks haven't ever used this, but what a red herring is when someone is selling you something and they're working real hard to point out all the good things about what they're selling, you automatically know they are not working hard to tell you anything about the bad things they happen that are a part of this deal. So always know that you need to understand what you're buying, and if you don't understand this tractor or this truck or this house or this plant, bring someone with you that does know about them, that can help you evaluate and appraise it. Because that fellow selling you a truck leaning up against the hood pointing to you this great paint job or these new tires, he may be leaning on a dent that's in there that he don't want you to see. That's always a chance, and he's not breaking any laws. He's doing a red herring. So you want to protect yourself from that. Splitting the difference is, in other words, finding common ground. You're apart. You're not together with someone. Your numbers are a little bit different, and you would really like to do this deal with these people, and we're up high enough in their offers that you feel good about it, but you want to get a little bit more. So you try to lead them to say something like, well, can we find common ground, or can we split the difference here? You say things that encourage him to do that, so that when Jimmy says to me, well, Steve, you got this $800 truck, and I don't want to give you but $600 for it. You ready we can meet in the middle? I don't say, well, Jimmy, you're offering there to split the difference there. Is that right at $700? And yeah, I'll offer $700. And I'll say, okay. Well, let's talk about this, because I'm really got my price down low now. So now you're at $700. And I'm at $800, and you want to split the difference at $750. Okay, let's go ahead and do it. What just happened? I just made $50 more. And if someone brings it up and offers to split the difference with you, that is a buying signal. They have indicated to you they'd like to go ahead and do business. So sometimes you can split the difference several times and increase your situation several times to good by keep splitting the difference as you go up. Takes a little practice, but it really works well, and so something you might want to try. Show me the cash. Man, it works. When my wife and I recently traded cars, she got one. We both traded our old cars for used cars. In other words, we got new cars to us. I went and I made a good deal, what I thought was great, came back and told her what I'd done and bragging on myself about a great negotiating. So she got in her car and she went to the same dealership and she traded with them and got a lot better deal than I did. And she used this tool. She negotiated them way down to what they thought was their bottom dollar. And then she pulled out her checkbook and she said, I'm writing this check out for this amount, which was well below their bottom dollar. I'm writing it out for this amount. Now, I can fill in here your name and give this check to you and we can do a deal. Or I can fill in that guy down the street and go buy a car from them. I've already checked them out. That's powerful. When you say, I'm showing you the cash now and I'm ready to do the business now, you need to be ready to do business. But listen, always make an offer that's below where they're at. Well below. Because they may come back and make you another deal, which you may go with. But showing the cash moves people, especially in a car dealership or a furniture store. It moves that salesman to go back and talk to the boss and say, hey, we got a cash offer out here. You want to take it? And they're going to figure out every way in the world they can take it and not have to let you walk out the door and give your money to somebody down the street. That's negative cash flow. So if you're in a position to do that, it's powerful, but be willing to back up what you're saying. If you're telling that person you're ready to write this check out for them, then be ready to write the check out. The most powerful and used tactic employed negotiating to take money away from the other side is called nibbling, like nibbling a cracker or a potato chip, nibbling. That is when a deal is closed and they go to fix out the paperwork, and after you thought you had a deal, then the other person is saying, now, this did include that free oil change, or this did include this and that and this and that, and they keep on nibbling till they've eaten up all your profit. That's a very common practice that people teach and are coached to do, and I'm telling you right now, it is a wonderful way for you to get more value than what you're paying for. Nibbling. Get good at it. But on the other side of the fence, how do you protect yourself from that if you're selling? Well, here's the way you do it. As you're closing your deal, you write down what the price is, the agreed price is, draw a circle around it and say, now, I'm initialing this at $5,000. How about you put your initials there before I go have them do the paperwork? Okay? All right. That's fine. And then they start nibbling. And guess what you do then? You go back to yes if, no but. And you say, Sarita, I'll be glad to do that for you. Yes, I can do that if you'll pay my cost on it, because we already agreed to this number down here. And if we don't add that to it, you're going to have to ante up a little bit more money. And every time someone asks you to nibble on that, you ask them to ante up some more money. So what that will come to in the long run when you get really good at it are change orders. Because they may have beat you down on the price on that first thing they bought from you really well, but when they start nibbling and doing change orders, that's when you start making some money. You make sure you add enough money on there that's got some profit built into it. And at the end of the day, just like if you're building a house for someone and the owner keeps doing change orders, at the end of the day, there's a good chance you will have made more profit on the change orders than you did on the original house. That's the way things like that work. So knowing negotiations is going to happen, and forecasting them is what's going to help you be a lot better entrepreneur with some money in your pocket at the end of the day. You don't get signals from your customers when you're negotiating. You get buying signals from them when they're ready to do the deal, and you need to stop talking and start selling, start closing when they start giving you buying signals. So look out for those as you go along. And after you do your deal, you got the money, you got the signatures, you got the deposit, then wrap it up. Get your paperwork signed, all collected, shake your hands, congratulate them on what a great negotiator they are, and let me tell you what you want to do is to shut up and leave, because buyer's remorse is a real thing. Wives and husbands and other people get to chit-chatting and try to talk them out of this, or you ought to have done that, or you ought to have done that. And if you're standing around sipping a cup of tea or a Coca-Cola, they're going to start nibbling on you big time, or maybe even closing the deal or canceling the deal. So get your paperwork done right, be friendly, congratulate them on a great job, and move on out. If you're not there, there's a good chance buyer's remorse will evaporate. So what can I give you advice about? I told you how to the basics in negotiating and forecasting, but I've left a few things out that are really important. As business people, you want to be the person that vendors and dealers and store owners are glad to see come in the store. I've had good farm customers through the years that have taught me some good lessons. The people that keep coming back to you, it makes no difference what clothes they're wearing. Makes no difference what their station of life is. They want to be treated with respect. And the more respect that you share, the more respect they're going to give back to you. You want to be a person that don't waste folks' time talking and talking and talking and talking just to hear yourself talk. You want to be a person that knows what you want going in because you have prepared. Lay it out. Don't make any offers. Remember, if you're buying now, don't make any offers. You want to hear what they have to say. Give them a chance to give you the first price. That gives you a little advantage. And then have the money to make the deal. Have the credit sources to make the deal. Don't expect them to operate at a loss. If you want to keep someone to do business with you, a vendor, to keep doing business with you for many years while you stay in business, you want them to be able to make a little bit of money, just like you need to make some money. You don't want to be one of those people that come into your store or your business and expects you to lose money serving them. And there are a lot of people that way. And we'll talk about how to serve them later on down the road in other classes. But I don't want you to be the person that your most important vendors really aren't excited about seeing you come back. Yeah, we got to get the best low prices we can below fair market value so we can make profit on our own. But we also have to protect our relationship with our vendors. So by doing that, when indeed you need a special help, you want to order a truckload of something and you really need a good price and some free freight and maybe some extended terms on having to pay for it. If you're the customer that has worked out a few deals with the owner of the business or the manager of the business, then you're the customer they're going to be really glad to see come back. And you're the customer that they will give the best deal to. They will give you some special terms. They will give you some special consideration. And the word special here is all related to the relationship that you have built with them over a period of time that says, I want you to be profitable, but I got to buy stuff at a low price, and sometimes I don't need some help. There'll be times when your cash flow situation goes to pot. It happens. Unexpected things will come along that'll wipe you out or put you in a jam, but you still need to buy product from your vendors. And the relationships that you have created through the years give you the opportunity to make that phone call. Look, I know I owe you $1,000 this month. I can send you $300 now, and I'll do my very best to send you the rest before the month ends. But I need a little help and consideration. If you need to charge me some finance charges on it, I'll understand. But I can't pay it now on the due date. People will say to you, thank you for calling. I wish more people would call me, and sure, I'll be happy to work with you. 99% of the time, that's the answer you're going to get. But only if you have proven to them over a period of time that you stay with them, you pay your bills like you're supposed to, you're a good customer, you understand it, you've taken the time to get to know their names, a little bit about them, they recognize you. Creating relationships is the key to sustainability as entrepreneurs. So I'll say to you, God bless you. Thank you for staying with us tonight through the program. It's been a pleasure to work with you, and I'm looking forward to it. Now, next week, we'll wrap it up, and wrap it up with our taxes and deal closing, some more of this negotiating conversation, record keeping. A goodly amount of time we'll spend on how depreciation works for your business. That'll really help you, and such as that. And then next Tuesday night, we'll start a new series, and next Thursday night, we'll wrap this one up. So thanks so much for being with us, Rosa. It was a pleasure to have you with us tonight. I hope you'll come back often. Jimmy, Sarita, and Bart, thank you for being with us as well. Any comments before we close it off? Be glad to hear from you.
I want to say thank you for everybody who came tonight, and I hope you got something out of it.
Well, thank you, Bart. Yeah, we had some came. One had to leave early, just left us a few minutes ago, and it's been a pleasure to work with these folks. All good people, and all of us need to make $1.
It's true.
All right. We'll see you next time. Thank you all. God bless you, and take care.
Good night, Steve.
Good night, Sarita. Thank you for staying with us. It's good to hear from you.
You too.
All right. Good night.
Good night.